Good afternoon. It is 3 o'clock, and I think we're going to give people till 3:01 to actually start. But we will do that in just a moment, or halfway to 3:01. I'm impatient to begin. Okay. Welcome and good afternoon. I'm Lisa Donner. I'm the Executive Director of Americans for Financial Reform, and I want to welcome everyone to this webinar on the 10th anniversary of Dodd-Frank and of the creation of the Consumer Financial Protection Bureau. And thank you for joining us. It's a tremendous privilege and a great pleasure to be able to reflect on this occasion with Senator Warren, whose brainchild the agency was, and with Director Cordray, who along with Senator Warren did so much to make the promise of that idea into a powerful and important reality. I also want to recognize our coalition members, civil rights organizations, labor unions, grassroots community groups, and consumer advocates and more, without whose work alongside these two leaders, we would not have a Consumer Bureau. Before we begin in earnest, 1 second about the rest of the program. After this conversation, we'll move just about immediately into a panel discussion and then a second moderated conversation with advocates and experts from around the country, digging into similar questions of how the CFPB can advance an economic and racial justice agenda, and we hope you'll stay with us. And with that, I think we'll open by handing the virtual floor over to each of you for very brief remarks and then turn to some questions. Senator Warren?
Oh, well, thank you very much, Lisa. You know, I just can't think of better people than Rich Cordray and Lisa Donner and the folks at AFR to talk about how important the CFPB is. 10 years ago, President Obama signed into law the toughest Wall Street reforms and strongest consumer protections in generations, with a dedicated agency to go after financial institutions that trick and trap people. And even in the face of Republican and industry attacks, the CFPB is here to stay. It's out there creating a fairer America, not a perfect America, but one that is a whole lot fairer than it used to be. So it is great to be here with my friend Rich and with all of you for this important conversation. I'm ready to go whenever you are, Lisa.
Great. Rich, you want to say anything to start?
Sure, thank you. And to everybody who is viewing this webinar, you all are obviously fans of consumer protection, and you're part of the reason why consumer protection was put at the forefront of the agenda in Washington with the Consumer Financial Protection Bureau. And let's remember, when we think about how far government has been hollowed out and the executive branch is not performing basic functions that we need to protect and support our people across the country, that it was just a bare idea by Senator Elizabeth Warren, who was not a senator at the time, that became this consumer agency that has done so much good for Americans, middle-class Americans across the country, not the people who have the clout or the influence in Washington, but the people for whom our government really was built and needs to be effective. And it's a great example of that. Now, the leadership more recently has not been the same aggressive, forward-looking leadership that I thought we brought to the table, but the time will come again. And it has certainly been an eventful 10 years, and happy to be here to discuss any and all parts of that, which are also covered, of course, in my book, which is on display behind me, Watchdog, How Protecting Consumers Can Save Our Families, Our Economy, and Our Democracy. Thanks, Lisa, for having me on this conversation with my great friend, Senator Warren.
Great, thanks to you both. So if we can start with some relatively recent news, and with you, Senator Warren, can you say something about what you think the significance and the impact of the Celia Law case that the Supreme Court just decided is?
Sure. So let's start with the most significant part. And that is the Supreme Court found that the basic structure of the CFPB is constitutional. The law that enacted it is constitutional. And the bottom line is that little agency is here to stay. And that is the fabulous, wonderful, terrific good news. The part that's really interesting to me about it, and particularly when you read Elena Kagan's dissent, which is just devastating, I think, to the majority opinion, is this fundamental question about how Congress, how much leeway Congress has to design agencies to try to deal with problems like the problem of cheating consumers. And Kagan makes the point that Congress should have a lot of leeway in how to do that, that there's nothing in the Constitution that prohibits that. And I say that by way of trying to take us back 10 years or 11 years. When you get down to the design of the agency, one of the central features that a lot of us talked about was how to keep the agency as insulated from politics as possible. So the whole idea behind it is that you had all of the jobs were civil service jobs except for the director, and that the director would have protection to be there for 5 years and not sit at the whim of the president. And the reason for this dates back to the very same reason that the OCC was insulated from political control and taken out of the federal budget back in the 1860s. And that was the deep concern then and now that moneyed interests, the big banks, would come in and have too much political influence. And every time the watchdog, as Rich rightly calls it, barked that there would be political pressure to rein in that agency. And so we did everything we could through the budget process, through the appointment process, and so on, to try to insulate the agency from that. The bad news is the Supreme Court said you can't do it with the director. The director is going to have to sit at the pleasure of the president. But the good news is you can do it with the budget. You can do it with the rest of the pieces that keep it independent. And so the way I see it, at the end of the day, after 10 years of direct attacks from the Republicans, what we really got out of that Supreme Court decision is that the agency is here to stay and its independence has been guaranteed. Do you see it the same way, Rich?
I do. And by the way, the surprising nature of the Supreme Court's decision is that when this bill, the Dodd-Frank Act, went through Congress, there was a vigorous debate over how to organize the agency in the House of Representatives and then in the Senate. It went back and forth between having a single director or having a commission, and knew that that whole debate was apparently not allowed because it had to be done a particular way or couldn't be done with independence. And so, you know, this is a surprising decision. It's part and parcel of an academic movement among conservative legal academics to try to shore away all of the independence of federal agencies, which, as Senator Warren rightly says, was done by Congress in the first place. Congress had every right to do that, to try to insulate certain sensitive areas from politics, and in particular the area of financial regulation. Every one of the financial regulatory agencies was set up by Congress to insulate it from politics. And when the Federal Housing Finance Administration was created, they deliberately overhauled it because politics had undermined the ability to oversee Fannie Mae and Freddie Mac. And this was during the George W. Bush administration. Congress fixed that by creating an independent director. Now, by the way, that's going to be a separate case that's going to be in front of the court now this fall, Collins versus Mnuchin, and we will see what happens with that. I think the writing is on the wall. But the bottom line is, the important thing here is, unlike many decisions, the key issue that was presented was the constitutional issue of the independent director, and the court did decide that in a new and surprising way. The rump issue, which in the end proved more important, was whether, if you found there to be a constitutional infirmity, were you going to throw out the whole agency as a result? And the court very rightly said, and it was an overwhelming majority on the court to say, that you should not do that because Congress clearly intended, they wrote more than 100 pages worth of laws to govern consumer financial protection and to make sure that Americans were protected in this area. The result of this decision is that they will continue to be. However, it does, as Senator Warren noted, give us a chance to potentially install new leadership within the next 6 months, which would be badly needed, in my view, to right the course of the agency.
Great, and we will come back to that and what that new leadership ought to do. But looking back a moment and starting with you, Director Cordray, and we have talked about this before, and I know it's hard for you to pick amongst your children, but when you think of the most important, what do you think are perhaps the most important accomplishment of the Bureau thus far? And have there been any disappointments or shortcomings that stick with you?
Yeah, and you and I have wrestled over that question before, and as you say, for me, I've said before, it's difficult to try to pick my favorite child because of the various things that we did at the Bureau. I'm proud of what this team at the Bureau did in so many areas. But certainly a key was the enforcement work that the Bureau did to put $12 billion back in the pockets of 30 million Americans. That also put the entire industry on notice that someone was looking over their shoulder and they had to straighten up and fix a lot of their behaviors, which in many respects they did. That was important. And as Senator Warren used to love to remind me, the $12 billion we put back in people's pockets was saving $12 billion more in the future that could have been taken out of their pockets if we hadn't fixed those problems, and on ad infinitum. But that's important. I think that the consumer complaint handling has proved to be a really important part of the Bureau because it gave individual Americans a chance to have a voice and to have problems heard and respected and resolved. And by the way, during this pandemic, the importance of that function is being reinforced as they're having record numbers of complaints. I saw that the Public Interest Research Group just did another report the other day showing that complaints are up 50% over the record totals from any previous months during this pandemic, many of them referencing the economic distress people are feeling because of the collapse because of the pandemic. And thirdly, and very importantly, the safeguards for the mortgage market, the new reforms that Congress and then the Bureau working with Congress put in place were very important, and they've shown up very well during the current crisis. There has been a real emphasis on avoiding foreclosures, and a lot of strong loans that were made are harder to default, even though conditions are very adverse around the country. And I think that's important too. So, you know, there's many other things, and my book is full of the things that people did at the Bureau through their perseverance and their tenacity and their talent. But those are three that I think really did change things for the better for consumer finance markets and people.
Great. Senator Warren, what the same questions for you?
Well, Rich already got such good stuff here, right? And of course, I completely agree with him. If I can, though, I'll do a couple. One is I just want to underline, because I think it often gets overlooked, the importance of that complaint hotline. The fact that more than 1 million people have actually used it and had a place to go over a $5 complaint or a $15,000 complaint. And so many of them have gotten them resolved. Think about what that means. This is government working, not just in those big ways where you move the battleship, you know, by outlawing a certain practice and then you have an enforcement team that comes in, but people who just got cheated in one times and got a little justice from the federal government. And I'll tell you how I know why this one is so important. Part of it is how many people I've met out when I'm just out and about, when I'm campaigning, when I do town halls, people who will come up to me, hold out their hands and say something like $214.16. That's how much my credit card company had charged me in interest when I didn't know it because I paid up, you know, and they have their whole story to spin out. And there was no place for them to go. Sure, they could have sued, but have you tried suing for $214? And yet the sense that you're so powerless in this giant credit system, that they'll just keep your money and there's not a dang thing you can do about it. You file that complaint, and so many people said to me, I just felt better because I filed the complaint. Okay, maybe I'll never get anything out of it, but it was my way to say, listen, Buster, you cheated me and I want there to be a public record of that. And then they talk about, and then when I got a check in the mail within 7 days, I thought, wow, there's government that works. And that's what the consumer agency does. You know, I believe in markets, and markets usually work either because you can evaluate the product, you can look at the sweater and decide if you think it's worth that kind of money, and there's a tag to explain what the materials are, or because you get information from others in the community, right? So you hear from somebody else who got cheated by that business, and pretty soon that word spreads in your community and the business goes out. That's how markets are supposed to work. Credit markets were never any good at that. 31 pages of disclosure, and you still couldn't figure out what was going on in a consumer credit card contract. And the same company could cheat 1,000 people, 100,000 people, 1,000,000 people. If they only cheated them a little bit, you'd never even see a single court suit over it. So what happens by this complaint hotline is it's a way to reform that community in the digital age so that people can actually say, here's what happened to me, and have it heard in the community. And now, I don't know about you, but I see articles in the papers where, you know, stories in the media where somebody will pick up on, why is this credit card being identified as one that has so many problems? And that helps consumers decide, you know, I'm just not going to do that. And that puts a little market discipline back into the credit markets. So it's partly about government regulation, but it's about getting the markets themselves to work more responsibly and responsively the way markets should work. So I'm going to give an extra boost to the complaint hotline. And by the way, if anybody's watching this and really did get cheated out of $5 or $15,000, cfpb.gov/complaints. It's amazing.
So sort of a different take on what the CFPB's role and job is, or a question that gets at a different angle on that. Can you talk a little bit about how you think about the CFPB's role in taking on systemic racism and the extraction of wealth from people of color through the financial system? What can and should the Bureau be doing in this space and with these problems?
People of color are disproportionately affected by abuses in consumer financial markets. Abuses like predatory lending, being charged higher interest rates on mortgages or credit cards than white borrowers, or even being excluded from financial products altogether. And this isn't an accident. Banks were able to get away with this behavior for decades because nobody called them out on it. So when the Bureau rolls back a rule that would have required payday lenders to verify that borrowers can repay their loans, we need to understand that what's happening with payday loans isn't affecting all groups equally. And rolling back the rule to protect consumers doesn't affect everyone equally. It has been well established that these predatory lenders target neighborhoods with large Black and Hispanic populations, and that those are the people who are going to suffer most by the Bureau rolling back protections against abusive practices. And to me, this is one of the greatest failures, if not the greatest failure, of Mick Mulvaney and Kathy Kraninger. They have gutted the office at the Bureau that was dedicated to enforcing anti-discrimination laws, and they have taken virtually no actions against bad actors who discriminate against consumers on mortgages, credit cards, auto loans, you name it. When Mick Mulvaney took over, one of the first things he did was to reorganize the Fair Lending Office and strip out its enforcement powers. That crippled the ability of the enforcement lawyers at the CFPB to do their jobs. And it also sent a signal to Wall Street and all of his Wall Street buddies. And it said, hey, don't worry, we're just going to look the other way. When you discriminate against people, when you cheat your customers. And as if that weren't enough, Mulvaney put a political appointee with a history of writing racist blog posts in charge of the office that is supposed to protect consumers from lending discrimination. We need leadership at the Bureau that treats systemic racism in our country like the crisis that it is.
Director Cordray, do you want to add?
Yeah, look, this was particularly an issue in the wake of the financial crisis of 2008, because we saw it in Ohio when I was the Attorney General here before I went to the Bureau. There was an effort made to offer predatory loans called reverse redlining, making loans on worse terms than should have been made in the minority communities, particularly around Cleveland, Ohio, and it devastated communities. And what was the result of that? It was an epidemic of foreclosures in certain neighborhoods. People lost their homes. They lost all the wealth that they had accumulated in those homes. Housing values in the neighborhoods deteriorated, so other people lost the wealth in their homes. And if you were foreclosed on, you couldn't get back into the housing market, even at the bottom of the barrel interest rates for the next 7 to 10 years. This is the devastation that was wrought on communities of color all over this country. So coming out of that, we understood that at the Consumer Bureau, part of our job was to take the fair lending laws, which have been on the books in Washington since 1974, and to make them real, to enforce them for Americans. And we brought cases of redlining, which still exists around this country, make no mistake about it. It has not disappeared. Probably lesser than it was back in the 1960s, no question about that, but it still happens. Reverse redlining cases, cases of discrimination in auto lending, which provoked a sharp reaction from our opponents in the Congress, but was a clear and remains a clear problem in that industry. And we were hampered there because we had no authority over auto dealers, only over auto lenders. And so we fought hard to recognize the principle that no matter what your religion, what your race, what your sex, what your background is, you should be given credit on equal terms with everyone else, and you should not be discriminated against. And that's a basic American principle, I think, and we stood hard for that. And they have really walked away from that, as Senator Warren described, under the current leadership. I think they brought the first fair lending case I've seen in quite some time the other day. But the notion that all fair lending abuses disappeared suddenly, yeah, the advent of Mick Mulvaney and Kathy Kraninger is a fantasy. And we need to enforce these laws strongly to make sure people hold themselves accountable for offering fair lending terms to all Americans. Unmute.
Failed to unmute myself. Thinking about the crisis that the country is facing now, the health crisis and the economic crisis that is going along with it. Of course, a crisis that also is hitting some people more than others because it is playing out in an economy and a country shaped by the systemic racism that we were just talking about. What should the Bureau be doing now in response to the coronavirus crisis? What could it do to help protect people and stand up for them? And how would you characterize what it is doing?
So first, look at how the coronavirus has reshaped consumer credit at this moment. We know that debt loads are going up across the country. People are behind on their rent. Many of them protected only because we have an eviction moratorium in place for some renters, and that's about to expire. People falling behind on their home mortgage payments. And this means I think we need an agency that is prepared for an onslaught in at least two directions. One of them is in the direction of short-term lending, the payday lenders who may swoop in, the subprime lenders. Are we going to see people trying to do end runs around the regulations on home equity lines of credit, ways that consumers who are desperate, we have unemployment rates we haven't seen since the Great Depression, trying to take advantage of people and strip what remaining wealth they have. And it's going to take a vigilant agency to watch for this and to beat it back. The second thing is going to be around debt collection. The agency monitors, enforces the Fair Debt Collection Practices Act, and I anticipate we're going to see a lot more around that as people run deeper into debt over medical problems, student loan debts. Once those collections start, again, lots of problems in this area. Again, I'll point out on this one, this is where if more consumers will use the Consumer Credit Complaint Hotline at the CFPB, so that the CFPB and the public generally is alerted to what's going on. Another advantage of the CFPB Complaint Hotline is it functions as a sort of national heat map for where problems are arising and what those problems look like. So it's a way for both officials at the CFPB and for outside watchdogs to analyze, here's either a region of the country or a city in the country that's being targeted for particularly bad practices, or a company that people are complaining about their activities. And that helps shape both, should help shape the agency in terms of its response, and outside groups to highlight that more. Let's face it, Kathy Kraninger does not believe in protecting consumers. Mick Mulvaney wanted to change the name of the agency, wanted to make it clear. Remember, one of his first jobs was to add to the responsibilities of the agency, in effect, that they were there to help protect the credit industry, because the credit industry really needs that help. So what they've mostly done, although I'll let Rich speak to this too, is sit on their hands. And Wall Street has known that. Scammers have known it. That's a real problem. What we need is, we need to get somebody in there who believes in consumer credit and protecting consumers, just a level playing field. This is why I'm out there fighting to get Joe Biden elected, because we need someone, a president, who actually believes that government should work not just for giant corporations, that government should work for individual families across this country. I believe Joe Biden would be really good for the CFPB. And in a crisis like this, we need him more than ever.
Director Cordray, I know you have also written some pieces recently on exactly this question of what the Bureau ought to be doing in the crisis now.
Yeah, I wrote a paper with Diane Thompson, who's going to be joining you a little later, and Chris Peterson, colleagues of mine from the Bureau, about the kinds of things that the Consumer Bureau could be doing and should be doing to protect Americans right now at a time of great economic distress. And by the way, that economic distress has been delayed because there has been significant help, financial help given to middle-class Americans across the country. And I want to commend the Congress. You remember at the time the CARES Act was being debated and ultimately passed, there was criticism because it was being delayed by fights over what to do in the CARES Act. Well, those fights were very meaningful fights. It was about not just having this be one big giveaway to businesses across the country, But to see that some of the help was targeted at ordinary Americans, working class Americans, in the form of direct stimulus payments, in the form of enhanced unemployment benefits, and has helped people bridge some of the gap in the early days of this recession. But make no mistake, with unemployment in double digits, we're going to have a lot of distress. People are going to be in a lot of trouble. And Diane and Chris and I wrote a paper urging the Consumer Bureau to do 16 different things that would be more protective of consumers who are behind on their bills, who are unable to pay their debts, who are potentially going to be ousted from housing because they can't meet their mortgage or rent payments. These are all things that are going to be happening as this year goes on. And we're going to have another fight here in the Congress soon over whether there's going to be more help to the American people or whether it's time to cut them loose. And I hope everyone will fight just as hard to make sure that people get the help they need. After all, let's remember, people were working, they're willing to work. And it was only because public safety orders required them to stay home that they have not been working. That's a patriotic thing for them to do. And it is not through any volition of their own. They'd rather be working. And if they can't, we have some obligation to make sure that we do right by them. And I'm glad to know that there are people like my friend here in this discussion who has been fighting very hard to make sure their voices are heard and that they're looked after. By the way, one more thing. The comment on payday lending is the fact that that rule was just rescinded in the middle of this, to me, was truly shameful. Companies will get a chance to potentially consider whether they want to try to overturn the rescission of the payday lending rule and to make senators and representatives actually stand on the floor and speak up for the payday lending industry. I'll be interested to see what happens with that. But to me, that was one of the really baffling judgments by the current leadership as to why that's a pro-consumer move.
Yeah, amazing. Yeah. Credit at almost for free for large corporations and at 300% for struggling families. Doesn't seem like the way it ought to be. So, Senator Warren, digging in a little further to what you started to talk about kind of a future consumer bureau and a new director. What should be the priorities for the bureau in a new administration, and what should a president be looking for to find a director who can meet ambitious goals for a future CFPB?
Well, I like the Rich Cordray model of director for the CFPB. And I mean that sincerely. I think Rich was a terrific director of the CFPB. And there are a lot of reasons why, but this is what I think that that was me knocking on wood, President Biden should be looking for. It's someone who has courage to do what is right, someone who is data-driven, who looks at the numbers, sees where the problems are, and where the agency can do the most good for the people who need it. And then supports the people who are out on the front lines doing that work and actually makes it happen. That agency has the right tools and it's got the right people. It just needs the right leadership. And the right leadership is about someone who believes that the job of government, and particularly the job of this agency, is to make sure there's a level playing field for hardworking folks across this country, that African Americans and Latinx are not discriminated against, that women are not treated differently, that our military are not preyed upon. And that's what this agency is about, and that believes in that from the heart. What should be the first items on the agenda? Well, frankly, it should be dealing, as Rich said, with the two things that were on the agenda and that the Republicans have decided to undo, and that's about payday lending and about arbitration clauses. I think these are the two biggest areas right now where consumers across the board are getting into trouble. and areas where you can most take advantage of them. So I want to see the agency go into that. I want to see it a little more robust again. And I want to see them using all of the data that's coming out of the complaint hotline. But I want to see Joe Biden as president able to make a new appointment to head up the CFPB. You know, none of us wanted it to work out exactly that way, but the consequences of the Supreme Court decision is we can have a new director by January 2021. I'm ready.
Thanks. Director Cordray, thoughts on what priorities ought to be?
Yeah, I think that there are reforms that were put in place that have been broadly accepted by people across the spectrum. The reforms to the mortgage market, which have really strengthened that market, which was such a wobbly part of our economy in 2008, and the credit card market, where reforms have been embraced by the industry, and they've recognized that they've improved their relations with their customers, and the market is functioning better. It's important for us to recognize that that happens when you have even-handed enforcement of the law. Not only does it protect consumers, but it also protects the companies that are trying to take the high road and do the right thing and shouldn't have to compete against the cheaters who violate the law to get an advantage, and then they're forced to either follow or swallow the fact that they lose market share to them. A lot of people in the financial sector have embraced and recognize that there's some real positive to the Consumer Bureau. There are areas where it has not made as much progress, and I'd like to see more. Some of those, it'll get a chance to team up with Congress, and maybe there'll be changes in the law along the lines that Senator Warren described would be helpful. The other thing that a Biden administration would bring is not just a new CFPB director, which would be important, but also cooperation from the rest of the executive branch in working to support consumers. We got so much help from the Treasury Department, from the Housing and Urban Development Department, from the Pentagon on military lending, in the Department of Education, which has been so remiss in not being willing to work with the Consumer Bureau and not being willing to look out for students who are crushed by the student loan debt overhang right now. In all of these ways, a Biden administration, like the Obama administration was, would be much more welcoming to encourage people to team up with the CFPB to make progress on these issues. And it'll be really interesting and I think really fun to see if in fact we're lucky enough to have that come to pass and we do our part to make it come to pass, to see what kind of advances can be made for consumers in the next go round.
Thanks. So widening the lens a little bit, the creation of the Consumer Bureau was a major innovation in the financial system. From where we're sitting now, what next? What new structural changes in the role of Wall Street and how the financial system works does the country need now? Starting with you, Senator Warren.
Well, I've always said that we need an economy that works for everyone. The CFPB is just one part of creating an inclusive economy. We need to think about how we can make our financial system work, not just for millionaires and billionaires, but how we make it work for everyone. And a great example of how we could do that is my Stop Wall Street Looting Act, which we introduced, by the way, exactly 1 year ago today. And as you know, the private equity industry has an outsized influence on our economy. So I have a bill that I introduced that would stop these predatory firms from taking over companies, loading them up with debt, and then taking their wealth and just being able to walk away scot-free, while the workers, the consumers, and the communities are left behind. This is one of those pieces that, to me, again, is about just trying to make the markets work. We have these businesses that maybe struggling businesses may not, but private equity comes in and just vacuums out all the value. And then the business is left as a hollow shell. And it may go on for a while, but ultimately it just implodes. And the people who are left behind are left with nothing. And this has now happened in industry after industry after industry. We've watched it with Toys R Us, we've watched it with Sears, we've watched it in the nursing home industry, where it's been about cutting costs and reducing the investment in these businesses and leaving them as hollow shells. I think that that is a form of financial activity that is working great for billionaires and for millionaires, and just not working for anyone else. And I think we should be talking about new ways to restrict that. So I'll go, if you want to talk about structural change, there's at least one that I want to put on the table. I think we could make a real difference with that.
Fabulous. Thank you. Director Cordray?
Well, I'll second the motion on Senator Warren's Stop Wall Street Looting Act. And when she introduced it a year ago, I did a op-ed ringing.
I remember, and it was good.
Yes, and you know, it is badly needed. I will also say that unlike 10 years ago, that financial crisis was actually brought about by financial wrongdoing and predatory lending and irresponsible investing on Wall Street. And so that reform needed to be targeted around the financial abuses that had occurred. This time, the collapse has occurred because of the mishandling of a pandemic by this administration, which is a health issue in the first place, an economic issue now secondarily, and now very, very central. So I don't know that we need a broad reform bill of the same kind to look at financial services, although, again, bookmark the Stop Wall Street Looting Act, which I think would be very positive. But I do think there's a couple of reforms that are significant. One would be to look at the housing finance and recognize we need to have a safety and soundness regime. Mortgage servicers who are not now, those that are not banks, are not regulated at the federal level in quite the same way as they should be. And that is needed, and we're trying to stopgap that in the middle of this crisis. The second is student loans, where again, Senator Warren has had a lot to say about that. We do need some sort of forgiveness program. You know, whether it's limited or just what the scope of it will be, I don't know, and that'll be up for Congress to decide, but there's no alternative at this point but to try to free many, many young people who are under that yoke of debt and are not going to be able to get out from it easily. But if we could give them some latitude there, and if we could think about things like a fair interest rate that is keyed off of the discount window that the Fed offers to the banks, those kinds of things, I think we could make a lot of progress in this country and give a shot in the arm to the younger generation that is otherwise carrying this millstone around their necks as they strain to move forward and advance economically. And so that would be important.
Yeah, thanks. As you know, we at AFR are extraordinarily enthusiastic supporters of the Stop Wall Street Looting Act, as well as student debt cancellation. And actually, one of the things that was striking to me about the piece that you wrote, Director Cordray, about the Stop Wall Street Looting Act last year was the tie between predatory lending that we've been talking about earlier and the private equity industry. In addition to driving businesses into bankruptcy, they are also drivers of especially abusive for-profit schools and of many of the largest payday lenders. So a deep connection there too. We are 1 minute from closing. I want to ask both of you if you have any final words.
I'll take it. This is a moment of terrible crisis for our country. We're facing a pandemic unlike anything we've seen in generations. And about a half a step behind that pandemic is a financial free fall for our economy. The leadership in this country has shown that it is completely incapable of dealing with this. And Donald Trump has made the problem 10 times worse than it otherwise would have been. As a consequence, more people are infected, more people have lost their lives, and the economic turmoil is even greater than it otherwise would be. I am nonetheless optimistic. And I am optimistic because I see change coming our way. I see how many Americans across this country have said enough with the racial inequities in our country, enough with an America where the top tiny percent just keeps getting richer and richer and everyone else gets left behind. Enough with the notion that a Secretary of Education could just snap her fingers and think she's going to open public schools. And without additional resources, without any plan in place that everyone's going to send their children in and that teachers are going to have to go in to that environment. I see an America where people are ready for change. And I see a Democratic candidate, Joe Biden, who is ready to lead that change. I see people who are running for the United States Senate who are ready to be part of that change and give us a chance to have a majority in the Senate who want to see real change in this country. I see people running for the House of Representatives seats who are part of that and want to be part of an America that works for everyone. I see it up and down the ballot. And we are less than 3 months away from an election that will determine the direction this nation goes for generations to come. And so at this moment, I feel like it's a hard time in our country, but this is our chance to make real change, and that there are enough people around this nation that we're going to do it. We are going to build the America of our best values. We're going to do it together. November 3rd.
Thank you so much, Senator Warren, and thank you, Director Cordray, Senator Warren, for this conversation today and for your leadership on these issues. Enormously appreciated.
Thank you.
Thank you. Thank you all.
Thank you, Lisa.
All right, so in just a second, we're going to switch people and panelists, and a next panel will begin. So forgive us while we hit the leave button for those of us who are speaking now, and a new set of people join.
I assume at some point they press a button and like we're not like people, the entire panel can't hear me right. People can't hear me right now. Everybody good as far as your functionality? All right, it sounds like we're live. So hi everybody. For those of you who don't know me, my name is Linda Jun. I'm the Senior Policy Counsel here at AFR. I cover consumer and housing issues, and it's really great to be here. I'm really excited about this panel. So you're going to hear from a bunch of people who worked in various capacities on all these consumer finance and housing issues as the before, during, and the last 10 years and ongoing as we move forward. Let me introduce you to our panel. First, we have Lisa Rice, who's the President and CEO of the National Fair Housing Alliance. We have Kat Welbeck, Civil Rights Counsel from the Student Borrower Protection Center. Veri di Suvero, Executive Director of Alaska PIRG. And Carla Sanchez-Adams, Managing Attorney from Texas Rio Grande Legal Aid. So you can see lots of a diversity of experiences. So thank you all so much for being here. And before we begin, especially as we continue to grow as advocates, I just want to take a moment as we reflect on the aims of Dodd-Frank and all the ways that it's strengthened, meaningful protections for consumers and making our financial system healthier. We want to also recognize the original and ongoing stewardship of the lands upon which our communities and where we all are. even though we're all in different places, we are all sitting on Indigenous land. So just wanted to acknowledge that. But I want to turn it over to our panelists so they can tell you about their work themselves. So we're going to go around to each panelist. If you can just give us, some background, especially how does your work connect to the CFPB, to consumer financial protection, and really more broadly, especially in this moment, to economic and racial justice. So I guess I'll start with Lisa. I guess we can go the order that I introduced you all so we can keep the flow going. So Lisa Rice, you want to start us off?
Sure. Hi, Linda. Thank you so much for inviting me to be a part of this important discussion. I really appreciate it. The National Fair Housing Alliance is a national civil rights organization, but we're also the trade association for fair housing and human rights agencies across the country who address housing and housing-related issues like lending and insurance. We have about 200 member organizations peppered throughout the nation, and we really work on it in alliance to advance housing and lending justice. The National Fair Housing Alliance worked in coalition with a number of civil rights organizations and consumer protection agencies to help establish and stand up the CFPB. I still have scars from spending the night in the hallways and on the floors of Capitol Hill as we were drafting the Dodd-Frank law. Literally, there were hundreds and hundreds of civil rights and consumer protection experts working day and night to fashion that bill so that we could help build a more fair society and economy for everyone in the United States. And NAFA birthed the idea of the Office of Fair Lending. It is our goal to see an Office of Fair Lending established at every federal agency that works on lending policy or enforcement issues. And so again, I'm just humbled to be a part of this really important conversation, and thank you again for inviting me.
Thanks, Lisa. Kat?
Hi, I just want to start by also thanking Linda and AFR for the opportunity to join today's panel. Really excited to talk more about these issues. Again, I'm Kat Welbeck, and I'm Civil Rights Counsel at the Student Borrower Protection Center. And also prior to joining the SBPC, I spent 5 years in the Bureau's Office of Public Engagement. In my role at the SBPC, my work primarily focuses on examining the student debt crisis through a lens of racial and economic justice. As many of us know, many on this webinar know, student loan borrowers collectively owe $1.7 trillion in student loan debt, making student loan debt the second largest consumer finance market after mortgages. The student debt crisis touches over 45 million borrowers in every corner of the country, and the fallout of this crisis, so the delinquencies and the defaults, the increased cost of other forms of credit, the impact that student debt has on housing and employment is especially concerning for borrowers of color, particularly Black and Latinx borrowers. And so what we see is that the disparities in this crisis are a result of and continue to exacerbate systemic discrimination. And so what we see is that this crisis is a consumer protection issue, this crisis is a civil rights issue. And so as we look to address racial and economic injustice head on, this is no time for inaction. So we have disparities of this magnitude are definitely a call for our regulators to step up, and the CFPB has a duty to uphold its mission to protect consumers from severe financial hardship and economic harm. The Bureau's really needed right now to regulate the system that has neglected the needs of struggling borrowers, and the Bureau was doing this and upholding this duty under the leadership of Director Cordray. In particular, the Bureau has supervised the authority over the student loan servicing industry, and under Director Cordray's leadership, the Bureau was looking to examine potential discrimination risk in the student loan market, but that shifted course, as a number of things did after the change in administration. So that's just a little bit of background, but I'm really super excited to dig more into these issues over the course of the panel.
Thanks so much, Kat. And we'll go to Veri now.
Thanks, Linda. And I want to echo Kat in my gratitude to be a part of this panel and to also get to listen to everyone who is on it and who has so much experience. My name is Veri di Suvero. My pronouns are they, them. I'm zooming in from Anchorage, Alaska, which is Denina lands. And I am the director of Alaska PIRG. So for those of you who haven't heard of the PIRGs, we're a consumer advocate and public interest organization. Particularly in Alaska, our mission as the only consumer rights organization in the state is to ensure that there are thriving communities that are led and governed by the public and consumers rather than by corporations. And so we do that, and we focus on that primarily through a framework called Just Transition. And that is meant to, reflect that our community should be self-determined. Right now, there are extractive forces that the CFPB is, well, in its best form, is attempting to combat. And instead, those extractive forces, particularly financial forces, like debt collection, like payday lending, instead should be determined or should be transformed into resilient communities. And so the programs we do are, advocacy focused, but particularly focused on ensuring that our leadership is, led, or that our movement is guided by Indigenous leadership, by BIPOC leadership, and responsive to the needs of our communities. So particularly, we partner with Alaska Legal Services, Defenders in Town, to create debt collection training modules to address, people who want to become advocates, but who still have to confront shame in their background when it comes to experiencing, payday loans and the debt trap. And we also work on local ordinances. So I can talk for a long time about that, but I'll stop there, and I'm excited to hear from others.
Thanks so much, Veri. Welcome, Carla.
Hi, good afternoon, everyone. And I also want to thank AFR and Linda for the invite and the opportunity to share the perspective from Texas. It's a really big state, and certainly I don't speak for all of it, but I work for Texas Rio Grande Legal Aid, which is the largest legal aid organization in Texas. So we do help a lot of Texans from the very southernmost tip of Texas, bordering with Mexico, and we share that whole borderline all the way up to El Paso. And I'm in Austin, Texas. And so we have that huge area. We have about 22,000 potential clients per attorney. So it's a lot of work. And we do represent low-income clients that qualify for our service. And it includes a lot of limited English proficiency persons. And so we have a lot of immigrants and immigrant communities. We also have a lot of minorities. The vast majority of them are Hispanic, but we do have some other persons of color. And we're a very old organization that has been doing a lot of amazing work. We're primarily known for farm workers' rights, but our consumer litigation and consumer division has basically done everything from mortgage foreclosure and housing. We have a strong housing and fair housing practice. We do debt collection, we do student lending, we do just anything that comes to our office. And I manage a team that is a brand new team, a couple of years old, and we provide economic advocacy for survivors of violence and victims of crime. So that ranges from domestic violence, intimate partner violence, sexual assault, human trafficking, identity theft, familial identity theft, elder abuse, foster youth. And so it just runs the gamut. And I also practice on our general consumer protection team. And so I see basically everything that comes into our office, but one of the areas that I specialize the most in is credit reporting, debt collection, and that intersection of just debt and unsecured credit and credit reporting. So I'm very happy to be on here. And my first experience with the Bureau would have been back when they launched a economic empowerment or financial education tool called Your Money, Your Goals. And we were part of a cohort that, they sent a trainer here, and then we trained everyone in our organization on it. And that was my first foray into the CFPB's world. After that, it expanded to more of the enforcement and then the regs, as some of the regs started coming out, and other parts of the Bureau and their offices. And I know later on we're going to be talking about what it should be doing. And I do want to say that while I applaud the education component, one of the challenges that we ended up finding with just that piece is that the vast majority of Americans who are living paycheck to paycheck, which I'm sure everyone on this call knows, have challenges with some of the new initiatives that the Bureau is working on. Specifically, Director Kraninger had a field hearing here in Austin last summer, I believe, and she wanted to talk about like their new savings plan and their savings tools. And one of the things that almost every consumer advocate that was at that meeting was trying to let her know is that our clients and the vast majority of Americans don't have the ability to save. And it's because they don't have a living wage. Whether it's minimum wage that they get or just a salary, it doesn't cover the cost of living. And so they live on credit sometimes. And if the vast majority of our clients do see some catastrophic event, we've had floods from Hurricane Harvey, we have COVID-19 right now, people who get hurt and then are not able to work or become disabled, and they just cannot keep up or get back to where they were. And so, the idea of financial empowerment is important. Financial education is important, but it's just one little piece, and it's not extremely helpful when the vast majority of people come to us already in distress and not knowing about their legal rights that have been violated. So with that, I will turn it back over to Linda.
Thanks so much. I think that's a good perspective, especially as what the CFPB has been focusing on lately versus what it was doing before. But let's, before we move forward, let's, take a moment to reflect back. So, from your perspective, what do you think is the most important contribution that the CFPB has made in the last, I guess, 10 or I guess it took some time to get up running, so a little less than 10 years. And does anyone want to start, or I can? Here, how about I'll start with. Okay, go ahead.
I'll start. So I really appreciated what Director Cordray, or former Director Cordray, and Senator Warren said, and just to give another angle on their answer, because that was my answer too, was enforcement and the complaint database. And so as an attorney who litigates cases, I really appreciate the enforcement component, because it's something that we can then use in our litigation. So for those of us that are consumer advocates, consumer lawyers, being able to use the consent decrees, being able to use the complaints themselves, and to issue spot and to see, how these bad actors have acted, and it's a pattern and practice to be able to establish that, especially in certain statutes to talk about willfulness, that they knew or should have known. So when it's something in a complaint or consent decree and they're continuing to violate it, it's extremely helpful for us to use in litigation. Also, even in settlement, I've had conversations with other parties who want to keep everything confidential. And I say, no, we're not going to, because this was part of your consent decree. It shows that this is, again, a pattern and practice of behavior. So we're not going to keep this confidential. And so it's extremely valuable and a helpful tool for us. And of course, when you're putting $12 billion back into the hands of American consumers, that's a huge deal. So I don't want to underscore that. And putting the industry on notice, that is definitely something that, especially with recently what happened with COVID-19 and with the director coming out and saying that they weren't going to be holding consumer reporting agencies responsible for not responding to consumer disputes within 30 days because they understand, that they may not be able to respond as quickly. And yet there are private attorneys who are enforcing these provisions, because it's also important for consumers who need credit and who are not able to get it because of inaccuracies in their reports and aren't able to get any response to these disputes within that 30 days. So enforcement actions is a really big piece. Another, of course, is the complaint database that they all talked about. And just, besides it being, for all the reasons that they said, I agree. We have clients that come to us, like Senator Warren said, that have less than $1,000, less than $500, and it's not worth the attorney. I shouldn't say that. It's very difficult for attorneys to get involved in those cases when there's other cases that may not have a solution that could be received by filing a complaint with the CFPB. It's extremely helpful for us to know that we can refer them to a complaint database that actually works, and not just sending them into the void, the nether. They will never get a response. as well as just, again, as people who litigate, to be able to issue spot and see, here are all of the complaints against these bad actors. And you know, this is not an isolated case, similar to what I talked about with the enforcement, the willfulness piece. For those that do class actions, we can't bring class actions because we're LSC funded, but for those that do, that's an important way to know how many people are being affected by this. It's an important component for the enforcement division of the CFPB to have that information to see that this is recurring. And it's also really important for people that are working in the policy space to see this is a problem and to have those numbers and figures. I am not one of those that is working in the policy space, but I did help NCLC write an amicus brief, and on one of the issues that is near and dear to my heart, which is the topic of coerced debt, and that's debt that happens in the context of an intimate partner violence or intimate partner relationship. It shows that this is a common problem, and this is how the industry is not responding well and not complying with the law. And so when states are, in the case of this brief that I was helping on, the state of Maine filed they passed a law, and the CDIA, which is the Consumer Data Industry Association, who's the trade association for the consumer reporting agencies, they filed a complaint alleging that was preempted by the FCRA. Being able to have numbers and figures showing that this is a pervasive problem, and being able to use something like that database and the studies that result with the CFPB, the studies that they have that result from this information is extremely helpful. That's it.
Thanks, Carla. I think Lisa was about to say something, so I'll go to Lisa next.
Sure, I'm happy to go next. So for us, in terms of the most important contribution that the CFPB made, I would have to say, sort of along the lines of what Carla was just sharing, the enforcement actions that the CFPB brought were profoundly impactful and helpful for our work because the CFPB, and in particular the Office of Fair Lending, they had the resources and they had the expertise in order to bring systemic cases. And that's where we really needed to see a great deal of movement in the finance area. We needed to see an enforcement agency that had the willingness and the expertise to address systemic bias in our credit markets. So the CFPB really helped advance the ball in addressing those kinds of structural barriers in the system. The Bureau was not shy at all. And one of the things that we appreciated about the first director of the Bureau was that he was, both Senator Warren and Cordray were willing to use their bully pulpit to talk about issues of structural bias and lending discrimination and redlining, and how that had played out in the crisis and how it was still impacting communities long after the foreclosure crisis was over. So that was really important. The other thing that the Bureau was not shy about doing is using a really important critical legal tool called the disparate impact standard. In terms of tackling some of these structural systemic elements. The disparate impact standard, it's a long-standing legal tool. In fact, most people don't know this, and I love this. I'm a history buff, so you guys may have to rein me in because I love history. The disparate impact tool was first used under the Nixon administration, under the Fair Housing Act, okay? And it was Senator Romney's father, George Romney, when he was the Secretary of HUD, was trying to fully implement all of the elements of the Fair Housing Act. So imagine this is 1970, 1971, just a couple of years after the Federal Fair Housing Act has been passed, in the aftermath, 7 days after the assassination of Dr. Martin Luther King. And George Romney is trying to implement and enforce the Fair Housing Act and all of the elements of the Fair Housing Act, including the affirmatively furthering fair housing provision of the law. And he's got cities across the nation who still want to exclude people based on race by using zoning laws to exclude them. And so Mitt Romney and the head of the AG at the time, Mitchell, under the Nixon administration, fashioned this theory of disparate impact and decided to use it under the Fair Housing Act in 1971. Since then, we have been able to use disparate impact to address systemic discrimination. Disparate impact it gives us the ability to address policies that may seem neutral on their face, but the application or the implementation of those policies has an unfair discriminatory impact. So for example, in a lending situation, a lender might adopt a policy in which they say they will not give a loan under houses that are priced under $100,000. So that may seem neutral in space, but when you analyze and break down the data, what you find is that a policy like that $100,000 cutoff will have a disparate and discriminatory impact on people of color and single female headed households and people with disabilities. And so even though these policies may have a discriminatory impact, what disparate impact says is you don't have to show intent. You don't have to show that you meant to discriminate against someone. All you have to show is that there's a discriminatory effect. And the disparate impact requires lenders to find a less discriminatory alternative to some of the policies that they may use that has a discriminatory effect. So the CFPB had a really good track record in using disparate impact, not just in the auto lending space, but in the mortgage space as well, and in the credit space, in order to tackle and address policies that were driving and sort of entrenching, if you will, systemic discrimination, right? And that was something that we had never had before, not in the lending sector. And the CFPB joined forces with the Department of Justice and brought a bevy of fair lending laws that really helped to change the landscape and help to set up new standards in the lending market and help to break down many structural barriers that were keeping people out of the ability to access credit. So that was one of the most important things that the CFPB did. And I will note that currently we don't see the disparate impact tool being used much at the Bureau these days. And in fact, the Trump administration has been busy trying to roll back disparate impact, particularly under the Fair Housing Act. The Department of Housing and Urban Development has released a rule, a proposed rule, that would essentially annihilate disparate impact. And we have led a coalition to push back on the implementation of this rule and to halt it in its steps. And I have to say, I would be really remiss if I did not note that in recent weeks, and this is really a watershed moment, it's an inflection point in our nation's history. In recent weeks, we've had a number of lenders and housing industry leaders do an about face and actually send letters to the Department of Housing and Urban Development and tell the department to halt, not to go forward with the disparate impact rule. That is a sea change, because these entities, primarily through their trade associations, had sent up letters during the comment period telling HUD, you know, we support this proposed rule that you have, and now they've done an about face. So I think it's part and parcel, because people are recognizing, when we see the disparities related to COVID, the COVID-19 pandemic, people are realizing that it really is structural, right? We are really battling structural systems that are locking people in to inequality.
Thanks so much, Lisa. And I think that's earlier Director Cordray was talking about how it was, when all the executive branch works together and all the agencies work together, how much good change there can be. And unfortunately, I think we're seeing, as Lisa just explained, how the opposite is happening with disparate impact right now. But Kat, you were at the Bureau for a lot of this time. So, from your experience inside and where you are now too, what is your thoughts on the CFPB's accomplishments? One probably.
For sure. I think there are just so many accomplishments of the Bureau, and I really, I won't go too deeply into them because I think, Senator Warren, Director Cordray, Carla, and Lisa also all mentioned these things, but again, just really want to emphasize the importance of the complaint database and really being able to give consumers a source to seek some sort of recourse or to go to talk about their issues with their consumer finance service providers. And then also the importance of supervision and enforcement in the student loan servicing space. And so I know that since we've touched on both of those, I'll just talk about another angle, just thinking about really the importance of the Bureau giving a voice to student loan borrowers and giving them a seat at the table. I think, we think about the accomplishments of the Bureau under Director Cordray's leadership is really great to think about how it gave special population offices such as older consumers, service members, or students and young consumers a seat at the table for larger agency efforts. So when we really think about before the CFPB, students often didn't really have a voice within the federal government, and the Bureau really became students' voice in DC. And so, oftentimes these offices can get sidelined and larger agency efforts may fail to consider the impact of niche groups, but by including these offices at the table, the Bureau really ensured that any rulemaking or any pilot programs were evaluated through a lens that showed how it would impact vulnerable populations and communities. And so when we think about this present moment that I think we've all kind of touched on, as so many consumers are suffering in the fallout of the coronavirus, I think this special attention to vulnerable groups and communities is so crucial and so important. And we could just imagine how the Bureau could be tackling these things right now if it really stepped up to its real mission to protecting consumers.
Thanks so much, Kat. And Veri, in Alaska, you're seeing people, how does the CFPB, how is the CFPB helping folks out there, and especially institutionally in the last few years? What do you think the CFPB has been doing well?
Yeah, well, I think that the existence of the CFPB is in of itself incredible and just validates the need for consumer protection, right? And so to have a shop where there are those protections that are enforced and enforced systematically, for me, lends credibility to the work that I do, right? And the work that AFR does. And so I'd say, just to add on to everything that everyone has already said, the existence of the CFPB at all is really important. And in the work that we do, Alaska is a huge state. We're 1/5 the size of the entire US. And we also have a really, we don't have great data about everyone in the state. And so the CFPB's data is really critical to inform the work that we do, especially since we don't have access to a lot of that data elsewhere. We have the highest number of military veterans living in rural Alaska than anywhere else in the US. And so, a lot of the populations who are most targeted, as veterans as well as Alaska Native communities, they live here, and we need that data from the CFPB, from the consumer hotline database, to be able to advocate on their behalf.
No, I think that's really important, right? The fact that in this country now, because of Dodd-Frank, we have a Bureau and we have a government agency that's consumer specific focus. I think we'd be remiss not to emphasize that a few more times today. But I think, as people have been already starting us off, right? We're here in this COVID moment. And so in this moment, what Kat was saying earlier, if the CFPB, was an effective place, what do you think from your experiences now and your work now that would be helpful from the CFPB, both to address underlying issues in general that you see, but it'd be crazy not to ask you, especially in this moment, for COVID specific type relief or assistance, where do you see this where do you wish the CFPB would step in? What kind of role, could they play? And let's switch up who starts. So maybe you go back to Veri to start.
Oh, awesome. Okay. I think there's a lot that the CFPB should be doing. I would say that all of the proposed rulemakings that they have come out with, particularly related to debt collection and payday lending, are not the things that they should be doing. The payday rule has been mentioned a couple of times, but basically it repeals a rule that was enacted after years and years of consumer advocacy efforts during a pandemic. And for some background, in Alaska, on a $100 14-day loan, the annualized percentage rate, the APR of that loan is 521%. In Anchorage, the cost of living is 20% higher than the average US city, not to mention remote Alaska villages. Another fun fact, I guess, about Alaska is that only 20% of the villages in Alaska are accessible by road. The rest all have to be reached by plane or boat. And so the cost of living rises exponentially as you go outside of the city. And so in Anchorage, we have high cost of living. We have an eviction tsunami that's about to happen as our eviction moratorium for other specific places ends. And we have a debt trap that's already installed in place in the form of payday lending. We have debt collectors and payday lenders currently garnishing the economic impact payments that were made, as well as other people's or other payments that people are receiving. Right now, debt collectors are not emergency services. They're not providing food to families. They're not keeping families housed. And so that in normal times is incredibly dangerous to the stability and resilience of communities, families, individuals. But right now it is deadly, and it will have consequences that affect our public health and everything else. So the CFPB repealing a payday rule that would ensure better practices for payday lenders and therefore consumers is unacceptable. There's a debt collection rule as well that is hoping to gut the Fair Debt Collection Practices Act. And there hasn't been a final rulemaking on that. But in Alaska, particularly, we have a higher percentage of people with debt in collections who are, consistently abused, harassed through phone calls, messages, and threats. And I think I want to end on this point with a story. There is a small village out in Western Alaska near a town called Bethel. And I one time was at a university talking about payday lending at a jobs fair. And a woman walked by and I said, I'm talking about payday lending. And you could see her eye, like her whole face fell, and she tried to run away basically because she thought I was a payday lender. And I said, no, I'm talking about like the fact that they are, trap you in a cycle of debt and, how we can fix that. And she said, yeah, like I wanted to go see my son for graduation in Anchorage. And I took out a loan online because the 227 villages that are federally recognized tribes in Alaska, most of them don't have, physical financial institutions there. And so she took out an online loan. It was fast cash. She didn't, and she went to see her son's graduation. And because of the payments and the interest rate that ballooned off of that one loan, she ended up not being able to afford the cost of living in her city and had to move it to Anchorage, lived without a home for a few years, and ultimately is still not able to go back to that village. So I just want to really emphasize within the work that we do of building communities, making them whole and helping them thrive, none of these current, payday lending, none of that is serving these communities, and the CFPB is doing nothing to help.
Thanks, Veri. The story has always helped people. I know it always, those of us who work on advocacy have varying levels of how close we are to the ground. And I think the stories always bring it back home to what this is all about. But Carla, I know you work with all sorts of communities too. And are there pressing problems in general or that are either exacerbated by COVID or just ongoing that you want to tell us about?
Sure. Yeah, I mean, I echo what Veri said about the debt collection, the payday lending, and, one of the reasons I focus on credit reporting is because everything is so interconnected. And unfortunately, or fortunately, depending on which side of the coin you find yourself seeing that day, because it's so interconnected, it affects every single walk of life. So the ability to get a cell phone, to get a utility connected at your house, to get housing, to get a job, to get credit, to get a car, to get all of these things that are important to be economically stable and secure requires a credit report of some kind. And so, you know, credit reporting is for that reason is something that is on my radar, and the intersection of debt collection, of high cost lending because of negative credit reporting, and you know, all of these things is incredibly important to our communities. So when I mentioned earlier that we have a lot of immigrant communities, we do have a lot of what the CFPB calls credit invisibles. So folks that, you know, have no credit and have inability to get loans because they have no credit. So then they're subject to more predatory lending and to, you know, these kinds of lenders that will give to people who have no credit. You know, there's again, pros and cons, like the ability to get credit is important. So having actors that can do that, but that can follow good rules, like what Veri was talking about. You know, if we had strong rules on that, on regulating interest rate caps, for example, so that they're not 500%, you know, that would be extremely important and helpful. Of course, we do see, because of COVID-19, that there are more people who are finding themselves in that position where they were furloughed and now they're laid off, and the inability to find jobs. And so they're unable to pay some of those debts that they had that they were able to pay when they were employed. And so that is, you know, not just evictions, but also like cars and repossessions of cars, and then how that dings their credit and their ability to buy a new car in the future, as well as you know, the credit cards. There's some lenders that are working with folks, but there are some that are not. In the mortgage context, it's the same. Some are under CARES Act protections, some are not. And so there's all of that, and the impact of that credit reporting that we're going to see in the next 6 months, the next year, and consumer reporting agencies accountable for being able to adequately and accurately report these things, as well as what do we do about this whole industry? How do we protect consumers? You know, why is it that they're profiting from my data without my permission? Like, I never asked them to do this. I never wanted them to do this. And they have this information, they share it, they sell it, they profit it. And if it's inaccurate, how do I go about fixing it, especially with public record data that I have no control over, and that can negatively impact my financial security if I can't get a job, which we see from clients. And of course, my clients with identity theft, how easy that is and how hard it is to fix. And just, there's so many of these issues that I think that the CFPB can be working on and speaking to the industry about. And you'd think that with something as big as the Equifax breach, that there would be some changes, but I haven't seen substantive changes really. You had, you know, the big three under pressure doing some things, and as a result of COVID-19, the ability to get your credit reports now every week. Like, there's certain little things to keep people happy, but they're not substantive changes to our actual credit industry. And so that's something that I would like to see them work on, whether that's in the form of regulations. I know that they do enforcement already, but whether it's increased enforcement that actually makes these big players scared of violating the law, as opposed to it just being standard business practice that we're going to pay out because it's too expensive to actually comply with the law. You know, some of these things I think are important that and should be elevated, especially, and I know that Lisa can talk about this more, about how it negatively and disparately impacts people of color. And especially credit reporting and the access to credit and how important that is. So I'm going to stop now and get off my high horse and pass it over to Lisa to just jump on that.
Sure, thanks for the pass, Carla, I really appreciate that. So it's interesting, this question about the coronavirus and the intersectionality between COVID-19 and the Bureau, right? Because I think what has become abundantly clear is that we're not dealing with just one pandemic, right? We've got 3 pandemics. The health pandemic, which is the COVID-19 crisis, the economic crisis, which is a birth from that COVID crisis, but we're also dealing with the pandemic of racism in America, which extends back from before this nation was founded. And I think it's becoming clear that the COVID-19 pandemic is going to exacerbate the pandemic of racism, right, and racial inequality. If you look at the data, the Urban Institute, I think just the other week reported that roughly 30% of African-American homeowners were not able to pay their mortgage. 17% of Latino homeowners were not able to pay their mortgage. And about 10%, not quite 10% of white homeowners were not able to pay their mortgage. So it's really clear, if you just look at the data, that this crisis is going to exacerbate the racial homeownership and wealth gaps. And to Carla's point, we know that the more wealth you have, the better your credit score. There's a great intersectionality between wealth and how high or how low your score is. There's also a lot of intersectionality, and that's why the point that Veri was raising was so interesting to me, because there's a high degree of correlation between where you're accessing credit and what your credit score is. If you have access to the financial mainstream, where when you pay your debt on time, you pay back that obligation, those positive payments get reflected in the credit repository system and inures to your benefit, you have a higher credit score. But you're accessing credit from a payday lender or a check casher, you pay back that obligation, that positive information is not reported to the credit repository system, and so you don't get the benefit of a lift in your credit score. But conversely, if you don't pay your obligation and go to collections, then that information, that negative information, does get reported to your to the credit repositories and the credit bureaus. So this whole relationship between how the coronavirus will impact people's ability and exacerbate these credit access issues that Carla and Veri were talking about is something that the CFPB should be keeping its eye on, something that it should be watching. And I have absolutely no faith that under this particular CFPB that they're keeping their eye on this issue. The reason I have no faith is because we've seen recent reports just over the past few months that lenders have been engaging in wide-scale redlining. ProPublica just broke an article in which they reported that the OCC has essentially shuttled and shelved at least 6 complaints of redlining. They're not going to investigate them. They've already shelved them. And we also saw a report from WEBZ. WEBZ did an analysis of lending patterns in Chicago. The report is called Where Banks Don't Lend, if you're interested in looking at that. And Chicago is a very interesting place to do this kind of an analysis because Chicago is hyper segregated. It's one of the most segregated cities in the nation, but it's also about a third white, a third Black, and a third Latino. So you would expect to see equal levels of lending in the Black community, white community, and Latino communities in Chicago. And instead, what they found in this analysis is that for every dollar that lenders invested in white neighborhoods, they only invested 13 cents in Latino neighborhoods and only 12 cents in African American neighborhoods. And we don't see the CFPB doing anything about this. And it's so sad because that's what the CFP was created for. The CFPB was created to do that because in the lead up to the crisis, the foreclosure crisis, we saw that the prudential lenders like the OCC and the Federal Reserve were failing consumers and not addressing issues of redlining and reverse redlining that Richard Cordray talked about. It was so blatant, you know, everybody was screaming and hollering about it, and the regulators were completely in bed with the lenders on that issue. That's why we created the CFPB, so that it would be the regulator for the consumer. And we're seeing today that it's really not standing up to address these critical issues. And we really need to work to make sure that changes.
Thanks so much, Lisa. And Kat, what do you have to add on student lending or on your CFPB alumni reflections? And you said, you know, imagine if the CFPB was doing what they're supposed to. So
it's like in this perfect world where the CFPB was doing what they should be doing, we would really think about a lot of the failed implementation of the CARES Act, and really the Bureau having a role in making sure that that borrowers are getting the protections that they're guaranteed through the Act. But we've seen that, you know, 5 million borrowers have had damaged credit from errors in reporting the federal student loan payment suspension. We've seen that, you know, if borrowers have improperly had their payments debited and then not refunded. I mean, there's a role for the Bureau there. And then we also see that even broadly beyond the Bureau's authority, really just thinking about how many borrowers were really just like left behind in terms of private student loan borrowers are completely left out of the federal relief. And we also know that multi-state relief is only temporary. So really soon, the forbearance on these loans are going to expire, and then what's going to happen? And I think, you know, everyone's kind of touched on this pandemic is disproportionately impacting communities and borrowers of color, and as is the broader economic fallout from the coronavirus. So when we're thinking about, you know, the potential for staggering default and delinquency, you know, it's really concerning because borrowers then might face the risk of wage garnishment without a court order, Social Security and tax refund offset. So there, the loss of professional licensing, there's a lot of negative consequences that can follow delinquency and default. So as we're thinking about a lot of the potential for economic harm following the pandemic, it's really a cause for alarm, and really, you know, where's the Bureau right now, as there are many borrowers struggling or potentially on the cusp of facing these issues.
thanks so much. And so I know we have about 10 minutes left, and this is going to be picking among your children, but hopefully you've talked about a lot of the issues that are your children so far. But, you know, going off of what Senator Warren and Director Cordray were imagining for a new administration. So let's say in January 2021, we get new leadership at the Bureau. What do you think that they should, what do you think that their priorities should be for those first few months? Where should they start with? And I know some of you have touched on some of the things they need to undo already in our conversation, but I'll end with asking each one of you that, and we can, here, I'll start with Lisa and go back in the old order.
I was expecting to go last. So re-strengthen the Office of Fair Lending. We need it. It is currently defanged. We need it to be to have that enforcement authority, and we need to bring that fair lending expertise back under the auspices of the Office of Fair Lending. The other thing, I did not mention this before with respect to the complaint database. Right now, if you want to file a complaint of discrimination, it is not, the system isn't user-friendly. It's not intuitive how you would file a complaint of discrimination, and I would hope that the Bureau would fix that right away. The thing that I will mention that I hope the Bureau will address in future, and we haven't really had a chance to really delve into it on this discussion, but that's the issue of tech bias, because we're seeing an increase in the use of different technologies, especially algorithmic-based technologies in the financial sector. And those systems perpetuate discrimination. In fact, they can often amplify discrimination. So I'd hope that the Bureau would address that.
Thanks, Lisa. What about you, Kat?
As I unmute myself, sorry. Definitely what we would love to see in the Bureau moving forward is, we really think the Bureau should be doing a rulemaking on student loan servicing. So this was slated on the Bureau's rulemaking agenda for years, but was removed under the present administration. But we see that the student debt crisis is only getting worse, and we know that the Department of Education right now isn't doing anything about it. And so we really do think that the Bureau really needs to step up and use its UDAP rulemaking authority to define borrowers' rights and also servicer conduct. And then one more thing, if I can say too, circling back to something in the earlier conversation between Senator Warren and Director Cordray, is also really talking about debt forgiveness and debt cancellation. I know we're talking about what the Bureau can do, but also broadly beyond what the Bureau is doing, it's just really thinking in terms of consumer protection. An important step would be for borrower cancellation. So like even in the most modest proposals where, you know, $10,000 would pull up a significant number of borrowers and pull them out of the system. And also we know that this would greatly benefit many struggling borrowers, especially Black and Latinx borrowers. And so just really thinking about how debt cancellation can advance goals of equity as well as broader consumer protection goals. So 2 things on the wish list.
I think two is more than enough, but there's so many, right? What about you, Veri?
I've already talked about payday lending and debt collection. I think another big thing, like Kat said, the student debt section of the CFPB has been gutted. So I think just reaffirming the commitment to consumers would be the first step. Right, by building back up to where the CFPB was at under Director Cordray, by filling positions, by, you know, affirmatively going after cases, by making sure that the consumer database is transparent and public. And I think another big thing that we really haven't touched on is forced arbitration. But a lot of the work that we do is mystified by the amount of forced arbitration that is included in debt collection cases, in lending cases. And so for the CFPB to, you know, expand their focus and look more holistically at consumer issues, right, and places where they aren't maybe doing as much work and should be expanding out towards. And that includes, just like Kat said, I think equity in auto loans and lending, and sort of running the gamut, but really focusing through that lens would be really critical. So thank you again.
Thanks, Veri. And Carla, you want to close us off?
Yeah, geez. I mean, I could give like specific, like their debt collection rule, what needs to be taken out completely, like the electronic disclosures and notices, and then the disclosures on time bar debt. Like there's just some of those things have got to go. And so I would like to see that happen specifically. And then, you know, with arbitration, it was just such a devastating loss when the rule that the strong CFPB passed, and then was the Congressional Review Act just gutted it. So like that, I mean, can they bring it back? Should they bring it back? You know, I think that those are kind of political questions in some ways, but one of the things that I would like to see happen, just as much as that there's like a student lending office, and in theory, there should be strong office on fair lending and on you know, race equity. I want to see something on gender equity. And that's because it's such a part of, there's, you know, we talk about intersectionality, right? And so there's not just a disparity between race, but also with gender, and even more so with gender and race when you're talking about Black women or Latinas versus Latinos. And I mean, and so much of that is also because of what I do is gender violence, so much of the economic abuse and gender violence and all of that. And I don't really see that lens at all in the Bureau. I don't see, even within the proposed rules, I don't see a lens from folks who know, you know, what is going, I hate to say this, but sometimes it's like you're the ivory tower. They're far removed from what's going on down on the grassroots and with people. And so sometimes when you talk to certain folks at the Bureau that are so far removed from what happens day to day and the lens of how they're viewing, whether it's supervision or regs or enforcement, it's coming from, you know, this limited perspective. And so I appreciate that they do reach out. I know that they engage legal aid attorneys, they engage community activists and community organizations, and that needs to continue to happen and happen even more so in areas that are underserved, tribal communities as well. Like there's some of these things that I think they need to consider, you know, the low income and not just high income, or like, you know, middle, high, like there's so many more issues that we see that is just like not on their radar at all. And so I know that was two different things that I said, but just having a different lens and seeing through that lens in everything that they do, I think is very important.
Well, I know we have a minute left, so I'm going to use that to say thank you so much to our panelists. I think the biggest thing I'll say in closing too is that I think this panel really shows the intersectionality of all both that if you're a consumer in the system, right, like most people don't have just one loan. You have a credit card, you have a student loan, you have a mortgage, you might have gotten stuck with a payday loan that's still ruining your credit a few years in, even if you got out of it. And I think also just like working on these issues together from, all over the country and from different perspectives is really important. And one of the best parts of my job here at AFR has been getting to know all of our panelists in my 2 years here. So, and continuing to learn and grow in a number of ways as I continue my advocacy as well. So thank you so much for being here and for sharing your expertise and your insights with us today. And with that, I'll turn it over. I know our next for Diane Thompson and Morgan Harper are going to have a conversation next. So I know it's a long afternoon, but I hope you're learning and excited about these as much as I am, because I'm really appreciating everything. So please stay with us for the next part.
Thanks for having us.
Thank you, Linda.
Thanks.
Thank you.
Or somebody else tell me when we're set. Diane and Morgan, can you just do a mic check?
Hi. Yep.
Yeah, we can hear you. Great. I can hear you both.
Ed, you're live.
We're live?
Yeah.
Okay, great. Well, I'm Ed Mierzwinski. I'm with the U.S. Public Interest Research Group. I've been active in Americans for Financial Reform from the beginning. We're one of the groups, along with many labor and consumer and civil rights organizations, that helped put AFR together to fight for the CFPB. Afterwards, we worked with the CFPB for a while, and now we're fighting to get the CFPB back to where it once was. But importantly, it's still there and it's still accomplishing a lot. And I'm privileged to have two panelists on this closing conversation who have worked at the CFPB for quite some time and done other things as well, to talk about the vision and the future of the CFPB. So one of them, let me just introduce them briefly before we get to questions. Diane Thompson is an Open Society Foundation's Leadership in Government Fellow. She previously held several positions at the Consumer Bureau in the Office of Regulations, including as Deputy Assistant Director of the Office of Regulations, and worked on a number of the regulations that you've heard about, including mortgages, credit reporting, student loans, servicing, fair lending, debt collection. Also, we have Morgan Harper, who worked as an advisor to the first director of the Consumer Bureau, and also, I believe, worked with Diane at part of her time at the Bureau. And she then went to become a vice president at Local Initiative Support Corporation, which is the biggest CDFI, community development financial institution in the country. And then after that, she ran for Congress. So she, I presume, before this zombie apocalypse that we're living through, she went out and knocked on doors and talked to people in the community. Something that my organization used to do a lot of too, and we're trying to figure out how to do it over the phone and over the Zoom right now. But I'm really excited to just ask them some questions about the future of the CFPB. But before we do that, I'd like to ask first each of you to comment on what's something when you were at the CFPB or previously at the CFPB, what's one of its biggest accomplishments? Was it just being there, or what is one thing that really stood out about what the CFPB accomplished under the first 6 years of its reign. Diane, do you want to start?
Sure, I'm happy to start. It's a really good question, as I think both Director Cordray and Senator Warren made clear. There's a long list of things to choose from. I think for me, it really was true that the CFPB was trying very hard to intentionally be a different kind of agency. And you saw this in things that were small, like calling themselves the Consumer Financial Protection Bureau and putting consumer first, and not using the very stodgy, archaic seal that many government agencies use on their correspondence, but having the little green icon with the spotlight going out. Thinking in lots of different ways, how do we embody this vision in Dodd-Frank to center the experiences, as I think Lisa said earlier, of consumers, and to really think about who are the people we serve, what are their needs, how do we be their voice in the federal government, how do we make ourselves a welcoming place? That's a radical change, and I think has potentially transformational effects, and it was probably one of the reasons why the very first thing that Acting Director Mulvaney did was to change the Bureau's name, regardless of the fact that that was likely to cost hundreds of millions of dollars to financial institutions. That was his top priority. And it both seemed kind of silly, but I think it was emblematic of the difference in the views and the centrality and the importance of having that view, and what a radical statement that is, and the radical power embodied in thinking about this as an agency that centers consumers, and particularly centers what are called in Dodd-Frank Act traditionally underserved communities, the communities that were hit the hardest by the Great Recession, primarily African American and Latinx communities, but also other communities of color, low-income communities, military veterans. A large swath of the country was hit particularly hard. Dodd-Frank said, CFPB, we want you to pay attention to that. And I think the steps that the Bureau took towards realizing that vision are its most profound and important legacy.
Great. Morgan?
I really, as usual, want to echo a lot of what Diane said, one of my CFPB heroes, so I'm glad to be reunited with her on the panel, and also here with you, Ed, and thanks AFR for bringing us together. Because I think that's really right. The signaling of CFPB as a message that government can work for you, you being person on the ground, living your life and trying your best to get ahead in a country and in a climate that for a generation has tried to convince people that government is the problem, is revolutionary. And the fact that that was the standard of the culture, you're coming to CFPB to make that vision a reality and move with the same urgency that people on the ground need for you to move to protect their livelihoods. That I had a prior federal agency experience that was not the cultural experience that I had. It was part of the reason why, as a young person, I said, I don't know if I'd ever work in the federal government again, because it doesn't really match that urgency, that sense of urgency. And with CFPB, it was the real deal in that way, that we were working every single day. Certainly part of that was due to our leadership under Director Cordray of, we need to be translating all of this work into value for people as soon as possible. And also letting them know about how that value is getting created, and that it hit people's bottom lines in the form of $12 billion. That is the most important, to me, legacy of CFPB, that government can work for people, institutions can work for people, but they're very dependent on those that are occupying them.
Right, and $12 billion, of course, is the amount of money that the first CFPB administration under Director Cordray returned to consumers. Over 31 million consumers, veterans, people of color, just all kinds of consumers who'd been victimized by a financial system with a lot of what Senator Warren, well, Professor Warren previously had called the tricks and traps that essentially littered the financial landscape. And the CFPB has done a lot of work to try to fix those tricks and traps, eliminate them, try to make markets work better. An open-ended question. So would getting back to where the CFPB was 5 years ago, is that a worthwhile goal, or do we want to go further than that? Was the CFPB on a road that it took some steps down, but it could be a lot more? Could do a lot more? What does it need to do to get it back, presuming that we'll have a chance next year? Diane?
So we just had a long session with two very good panels who talked about all the work that had been done by the CFPB and the need for the CFPB to get back to its roots in terms of how it thinks about payday lending, how it thinks about debt collection, critically how it thinks about fair lending issues, how it thinks about its engagement with communities. I think all of that is very important. There's a long list that I think all of us could come up with. The things I just mentioned, Linda asked people to pick, the one or two favorite, but we could all go on. Home Mortgage Disclosure Act data, the lack of transparency, finish the rulemaking on small business lending, data collection, so that we can finally actually document the amount of discrimination that we all know is happening in small business lending. There's a long list of to-dos that were on the Bureau's to-do list 5 years ago, as well as now. I would really encourage us to think bigger than that. As Morgan and I were just talking about, this is an agency that has really, truly revolutionary potential in terms of getting us to think differently about what the role of government is, whose voices count, who gets listened to, how we weigh the costs and benefits of regulations, what we regulate, where we enforce, where we don't enforce. And that's implicit in everything everybody was saying. But what we've seen in the last 4 years, three, not even a full 3, is that we had not managed in the years that we were there to create an institution that was resilient to hostile takeover, that we had not built out the structures that would support that continued centering prioritization of the voices of communities of color, of low-income consumers, of military families, student borrowers. That work had just not quite taken root enough in a way that was firm enough that it could withstand the really active work by the Republicans to remove that focus and to make the CFPB look much more like other federal agencies that sure do good work, but don't really have this transformative impact on people's lives or the society we live on, that are not in fact engines of social, racial, economic justice. So I want us to really be thinking about what is it we need to do to get the CFPB to, not just over the next 4 years, not even just over the next 20, but over the next 100, over the next 200. How do we get it up to live up to that potential? I'll let Morgan.
Yeah, I think that's right. I'll just speak personally. Part of the reason why I ultimately ended up leaving the Bureau was feeling like I needed to get, a little closer connected to the experience of people on the ground, and also recognizing that we can do our best to make the consumer financial markets work fairly, but a lot of the reasons why folks are finding themselves in the position to use these types of predatory products is that the economy isn't working for a lot of people in this country, right? And the research has been done, and we all know that, and we knew it at the Bureau, and we were, pretty good about spreading that message. But I don't think that's really permeated into the general public in a way that's necessary to apply the political pressure to actually change the way that the economy functions and open up greater economic opportunity so people are less vulnerable. And I would hope that the next iteration of the CFPB that has leadership that actually cares about executing its original mission would do a much better job of communicating that message, and not only coordinating with other parts of the federal bureaucracy, but actually applying pressure on them to do the work of that central issue for our country that the economy is not working for everyone.
Right, and to those who are on the webinar who aren't aware, it's not just the directors, first the acting interim director Mulvaney and now the current director Kraninger, but those directors brought in political operatives to oversee all of the work of the CFPB, and those political operatives, I call them commissars after the old USSR designation. Those commissars have really demoted those offices that really had started to do some good work. The Office of Military Families, the Service Member Assistance Office, the Student Office, the Office of Fair Lending, and how much would it take to bring them back? What needs to be done to bring them back to what they were doing, and what else should they have been doing? You raised some very interesting points, both of you, talking to the community, reaching out to underserved communities. The CFPB had started to do that. What is the most important thing for a new director to try to do to jumpstart that process and get it going again?
I think I'll go ahead unless Morgan, you're ready to. So I think the most important thing is really actually just setting your intentions here. I think it is about saying, look, we have a statute. The statute told us to create an Office of Service Member Affairs. It told us to create an office, to have a private student loan ombudsman. It told us to create an Office of Fair Lending. It told us to create an Office of Community Affairs that worked with traditionally underserved communities to both provide and receive technical assistance from them. It told us to have an Office of Older Americans, again, and that information clearly in the statute is meant to flow both ways, both out to the community and back in from the community. And so what do we need to do? Like, what's our intention? We should live up to that intention. And how now do we build those structures so that those structures are deeply embedded in this institution and that they're thinking about everything we do? I know that Morgan mentioned how I think it's true that Director Cordray was always concerned about how do we return value to the consumer. And that was one of his great strengths. How do we show our value to the people of this country? And I think that we did not really figure out how to have those experiences, those voices, those perspectives fully embedded in our rulemaking so that they were influencing what rules we did, how we did them, how we weighed the trade-offs that inevitably happen when you do rulemaking, how we weighed the tension that's often, the false dichotomy that's often presented and exploited by Republicans of access to credit versus consumer protection instead of seeing that is really all about wealth building. We didn't really even embed those priorities in how we did enforcement, right? Or even in, I think the Office of Fair Lending did a good job about this, but I don't think even there, those experiences, those views were not fully embedded. They were not seen always as foundational to the work that we did. And I think that there are lots of structures that you can build out to do that. I think one of the things we haven't talked about at all, although Lisa hinted at it, is the role of the Office of Research. Again, that's a statutory creation. It's really remarkable. I don't know of any other federal agency or even state agency that has as much language in it, the Office of Research, about what it should do and the kinds of questions it should look at. And it's very clearly designed to prevent us from getting into the kind of mess we're in right now. I mean, it's clearly designed to say, we got ourselves into the Great Recession because we underestimated the impact of consumer credit on the larger economy. Let's not do that again. And, lo and behold, we're not paying attention this time, and we're sliding into another huge economic fallout that's going to have a devastating impact on vulnerable communities. So, we're doing it again, but we're doing it again because we are not paying attention to the data. The CFPB has released one research report during the entire time of COVID on what's happening with COVID and how that's showing up in people's spending habits, people's credit scores, people's access to credit. This Bureau should have been doing lots of work in COVID and saying, what's actually happening on the ground. Let's look at that consumer complaint database. Let's get information from the entities we supervise. Let's look at what's happening in our enforcement cases. Let's encourage consumers to file complaints with the CFPB as opposed to discouraging them by saying this is just a backstop. And let's get all that information. Let's put our phenomenal team of PhD economists and other researchers to work trying to look at all the data that we can get from every part to try to understand what the right policy interventions are. And instead, they've done one research report. They've kept on with their regular deregulatory rulemaking agenda. They've throttled back on enforcement and consumer redress in dramatic ways. But they can do that because they're ignoring data, right? So they keep saying over and over again, we think people need access to credit. We think they need faster access to credit. Let's release, Veri and Carla both talked about how they're relaxing regulations. So they're saying, let's relax all these regulations so that people can get access to credit faster. Well, interestingly enough, the data supported by the one research report that the CFPB put out show that no, in fact, credit is down. People are using less of their credit. People are sort of hoarding that credit and living off unemployment and living off other things because they know a rainy day is going to come and they don't want to overextend themselves. And so instead, we have this bureau that's pushing them to get themselves into situations that are predatory. So all of that's a long way of saying, I think from what we can see is that I would say we need to really highlight, put in the center the special populations offices that Kat and Carla talked about. I think Carla's point about gender and equity and thinking about that is a good one. How do you build that out? How do you make that part of what just gets into the Bureau's DNA of what do you think about? How do you think about these things? How do you make sure you're getting information? How do you talk to people so that they can give you information in a way that's useful? And really build out those special populations offices. And then I think really think about how do we build out the work of the research office so that it is doing the foundational research that we need to understand. How do we use this agency to build wealth rather than leaving ourselves caught in this cycle of saying, well, it's either access or it's protection, instead of, no, this is about building wealth. It's about building wealth and access to capital for all of our communities all across this country. So that's, I think the bigger work and what we need to do is really go back to the statute, look at what the statute told us to do, and fully implement the provisions that talk about paying attention to what's happening in communities. We told you that we wanted you to pay attention to traditionally underserved communities. You haven't quite done that yet. Let's do that, and let's build that out in such a way that it will be impossible for the next director, whoever they are, to ignore the voices of those communities.
Yeah, and before I get to your answer or your comments, Morgan, I just want to double down on one of the points Diane made about the database. Rich Cordray gave a nice shout out. We just released uspirg.org, you can find it on that website, our 5th report on the database complaints during COVID. We released it today, and the thing is, we found something that is not a secret from the CFPB, that complaint levels are up 50% during the pandemic from last year. Yet, the CFPB has put out a couple of reports that allude to that, but they haven't done anything. They haven't increased enforcement. They haven't helped consumers, except for this week, they announced National Consumer Financial Protection Week, and they're posting more ideas about how to save money. People don't have any money. Anyway, that's my rant.
Yeah, no, Morgan, if I may, one point on that, right, is that early on in the crisis, right, we now know that there was a big spike in complaints about mortgage servicers, right? It just shot up through the roof. And what were they complaining about? They're complaining that they couldn't get through. They were complaining that their servicers were misleading them about their access to forbearances under the CARES Act. They were complaining that servicers were threatening lump sum repayments. What did the CFP do right at that moment? It relaxed the rules that were put in place in the wake of the last crisis to keep servicers from doing exactly that. And it went to all of the other banking regulators and got them on board to say, we are not going to enforce any of the requirements that you provide consumers, homeowners, with timely and accurate information about loss mitigation options once they fall behind on their payments. If the CFPB had not done that and had instead said, no, services, we're really going to hold you accountable, I think we might not see the disparities that we're currently seeing in terms of the uptake in forbearance versus missed payments between Black families and white families, for example.
Morgan?
Yeah, I was just going to say that, well, I think that a lot of the culture also of CFPB, and especially in the use of the bully pulpit tool, which is one that we made some use of as a bureau, but I do think there was a sense that we were fighting for our very existence and making the case as to, one, how government can work for people, but you can't go too far, because then maybe it will somehow attract retribution or what have you. Well, now we have the Supreme Court case, right? The CFPB is going to continue to exist. So that is a settled question, more or less. And even if, yes, it's not going to be quite as independent as it was originally envisioned in part of the executive branch, or with more executive control, there is still an opportunity to make use of that bully pulpit function, I think, in a way that is more aggressive, and that does, like Diane is saying, make the case to consumers about what isn't working, what is the data telling us, what you should be, what we're concerned about, what you should be concerned about too, and what we're doing to address it, so that it does help to build the resilience of the institution as well. That I agree with Diane, is really important. But we can't be as timid, I think, in making use of that tool. And I think it will be easier because the institutional question is a little bit more settled, but also because the world has changed a lot in 10 years, right? So 10 years ago, we were told, oh, this is a once in a generation event, a Great Depression style economic instance. And now 10 years later, we're finding ourselves in another economic crisis layered on top of a public health crisis. And so I think especially, certainly across generations, but especially for a lot of younger people, the jig is up, so to speak, with a lot of these traditional talking points about what's possible through government and what our expectations of government should be. And I say we as if I'm already, at the Bureau, but whoever the next leader of the Bureau is, and whoever, are embodying these leadership positions throughout the agency, the special populations offices, the research office, I think should take that cultural shift and really use it to its maximum impact to benefit consumers and make the case to them.
Great. The time is running towards when we're supposed to end, but I'd like to let each of you think about giving a 2-minute summary of what you hope for the next CFPB director to accomplish, not in the next 100 years, but say in the next 2 or 3 years. What are the idea? What has helped you to get to the point of coming to that idea? And I know, Morgan, you ran for Congress. That must have given you some new ideas about how agencies and government need to communicate with the public. Anyway, whatever you want, you each have 1.5 minutes to 2 minutes. So who wants to go first?
I picked Diane.
Oh, thank you, Morgan. Yeah, so I think that we've heard lots of things that need to be done today. And I think there are obvious substantive tasks, like getting fair lending enforcement restarted again. We saw that the Bureau earlier this week, or maybe late last week, I've lost track, filed a redlining case, the first real, true, honest to goodness fair lending case the Bureau has done since Director Cordray left. We need to restart fair lending. We need to think about which of the rules that have been put out we want to pull back, or do we want to redo arbitration? How can we do that? What should we redo? How do we think about enforcement and supervision? But as I said, I think those are important. And I think that there are 2 components to that we've heard talked about. One is just the substantive task, what rules, what enforcement supervision, restarting fair lending, Military Lending Act supervision is another one that we didn't talk about, but I think would be on most people's short list. There are also probably structural and organizational changes. We've talked a little bit about the importance of the Office of Fair Lending and elevating once again its centrality. But I also think that so I think we have to think carefully both about the substantive tasks and the structural organizational changes. I think we also need to think hard about what our priorities are. And so I think it's important for us to keep our eyes on the prize, on the long-term goal, and think, what are the fights that are worth having? And where are the places where we can both make the most immediate impact for consumers, and we can do the most to set the DNA of this organization, establish the structures of this organization so that we will always put consumers first at the CFPB.
Great.
That's my probably more than 2 minute spiel. Morgan, you're up.
Yeah, no, I think that's right. And, I know Senator Warren referenced having personal interactions with people on the ground where they say they got this check back, and, that was a moment of validation just of the mission of the Bureau. I mean, I'll be honest, I didn't have a lot of those experiences when I was running for Congress in Columbus, Ohio. I was a little humbled, I guess, where, as we've been talking about today, the CFPB has done a lot of great work, particularly under prior leadership. But how much awareness there was of what this agency does and the impact that it had for people, I didn't necessarily get that in my home community all that well. And so I do think there will be a need to almost revisit what had been done in the history of how we got to the place of creating the agency, because I think that will add to one of the prior points that we've been making about just the legitimacy of the agency. In some ways was a little bit ahead of its time in a way, just based on how the culture has shifted in terms of what we're expecting from government. So telling that history, but then also, again, just being aggressive in implementing the mission and communicating those priorities well. And I think with the shifts that have happened, especially over the last few months, in the cultural awareness raising around racial justice, that has to be centering a lot of the work. I don't know that we always did a great job at externally communicating that. And I like what Diane was saying about the research function, because I think that connects to the larger messaging exercise that needs to happen. I've thought of one specific example that since we've been talking, and connects to some of Kat's points around the student lending industry, which I think before the Bureau was kind of like on that beat in an aggressive way. People didn't really understand the extent of the student debt burden and crisis. And I think some of the research helped to show, oh, and by the way, this isn't just young people who have been irresponsible in taking on debt. We have their grandparents, their parents, their caretakers who are also connected to this debt burden. This is a countrywide crisis, and that was developed through research that the CFPB did. So just getting that history told, setting clear priorities, and then also exercising all of the tools and power that the Bureau had, which ultimately was, I think, one of the best strengths of the agency, pulling on, just like any good organization, the different skill sets around the consumer complaint function, research, PhDs, advocates that were working internally, lawyers and enforcement, to bring as much relief to consumers as possible, and also set different directions for the markets, even if it wasn't connected to a specific enforcement or rulemaking exercise.
Great. Well, I want to thank our panelists, Morgan Harper and Diane Thompson, for some tremendous conversation. I wish we had more time to talk about these things and really dig deeper. But I want to close actually by stealing a line from an open letter that Director Cordray, Diane Thompson, and my old friend Chris Peterson wrote to Director Kraninger. They concluded, "It is in difficult times that strong consumer protections are needed the most. The CFPB is well positioned to make a difference for large numbers of Americans, but it must confront the circumstances and act immediately to mitigate the harmful effects of this crisis." So I hope that if you can say a good thing could come out of this financial crisis enabled by a pandemic, I hope the one good thing will be that we reevaluate and see the need for a strong CFPB, and that it is a new form of government that communicates with the public and particularly underserved populations and gives them a chance to reinvent government. So that's as far as I'm going to go with my philosophy lesson here at the end. But I do want to do one more last minute thing. In addition to all the great panelists that have been on all day long, I want to recognize all of the AFR staff and interns who work very hard to keep the tech working. And believe me, it's not easy. So thanks to all of them. And now just a quick announcement that we are not done with webinars. We're just getting started. And Monday, we've got a webinar with Senator Sherrod Brown and Professor Derek Hamilton, who are going to be on the next webinar. So look for that on the AFR website. And then on August 4th, there will be a keynote by Chairwoman Waters of the House Financial Services Committee, and the rest of that program, TBA, to be announced. So thank you, everybody, and have a safe weekend, and we'll see you next time. Bye.
Thank you.
Thanks, Ed.